All right. Good afternoon, KW Prosperity. It's Matt and Mary Beth here with Nick Marenoski from Gatorade. How are you, Nick?
I'm doing well, thanks. I'm happy to be here, and there's a lot of news and a lot of things to discuss to make people feel at ease about getting some normalcy or continuity of our business from both ends, you guys and ours. And I'm here today to share not only some of the news, but some of the successes, as well as maybe some challenges that we can get around. I take this day to quote Robert Frost and say from his poem "A Servant to Servants" to say that the best way out is always through. And so some of these things that we've seen before, and that for the people who haven't seen them, this is a little bit new, but it's something that we'll all be able to get through. And there is support from Gatorade. Gatorade is built for this. We've been through this before. We knew that maybe someday this would come again, and so we've taken all the steps to make sure that we can support all of our clients and real estate partners in the best possible way. So we're just doing what we do best.
So Nick, are you actually bunkered in?
Yes, I'm bunkered here in my house. I did buy a new exercise bike to make sure that I can get some of my stress and frustration out each morning. We early on all decided to work remotely, and it was something that we prepped for years to be able to do. And with our technology and this kind of video conferencing, it's been almost seamless. Aside from obviously getting the increase in business that we have and plugging through that, the actual remote move hasn't been, an issue. And so I'm happy to report that, even if we have, the most amount of business that we've seen in recent years, we've been able to handle it. And it's a credit to everyone that works for us. And we're grateful for each and every one of them. They all really have come through, and I'm sure the same for all the agents on your end, and I've seen some of the stuff posted and the support and ideas and workarounds and stuff like that, and I love it.
Yeah, we're being very creative in this time, and we're not letting it stop us from doing work and keeping our days scheduled. I was just on the phone with my coach, and we were talking about how important it is to get up and get showered and put your clothes on nowadays.
Yeah, you need to
create normalcy and just get ready to get to work and then having a day scheduled. So it is no different if we are scheduled. So go ahead, Matt.
Yes, Nick, so talk to us about what you're encountering in your world right now since really Saturday when the governor lockdown or whatever you want to call it with New Jersey. What have you been encountering? What are some of the most frequently asked questions you've been getting from buyers? How are you handling those questions?
Yeah, so some of the questions that they've come from a lot of people at the office, which is great. We've been in even before that executive order. I mean, we were already set because we knew it was coming. A lot of the questions are can you guys still close? Can we still do this? What happens if the closing is delayed? And some of the answers that I've had with Bill, Ron, and some of the ALC people is that for closings that are already in process, maybe the rate was already locked. We're providing free extensions for those cases where we might have had to delay the closing, of course. So we've helped in any of that regard. For any of the closings that are pushed out, depending on when they're pushed out, I mean, it might just be like, hey, we'll start the process, get things going, and then lock in the rate when we're close enough to the closing date. Because a lot of times the questions are, hey, we're closing 90 days out, and I say, hey, hang tight. We have some time to wait on this. And what I've been seeing in some of the major news, and I'm sure you've heard it from some of the other mortgage people, is that rates have been a little bit bumpy on the day-to-day, and they've done and they've done some bouncing around until they got some footing. And what happened this week is that uh, the Federal Reserve really stepped in to provide a ton of stability and liquidity, and even more than that, the Feds, as early as the other day, announced some leeway on appraisal and verifications of employment during this time. So we knew that was coming. We've implemented those processes, and it's important to know that our business is primarily, I would say, 99% Fannie Mae, Freddie Mac, FHA, and VA, the standard government-backed or government-based loans, which when there is some sort of turbulence in the market like this, or something that's unprecedented, when the Fed makes moves like this, it creates a good situation for us to continue doing business. And that's the major thing to say here, is that even if rates, bounced around a little bit, they're still near, lows. Currently, we've been this week offering rates between 3.25% and 3.5% on a 30-year fix, which and I expect them to stay at that point, just because there is a big gap between even how much support that's been given and where rates are. So I think that we'll see, as some of this goes down, as some of this continues, that rates will continue to keep in line with what they should be, with what they need to be, which will support our market, of course, and make sure that affordability is at its best for that.
Okay, so where are you seeing the rates right now?
So we're seeing rates between 3.25% and 3.5% on a 30-year fix. And what we're asking people to do is, if you're looking to, refinance, give us a call, get the process started, because it's all digital. We could even do Zoom. Some of the success of this is the excitement of some of our guys and ladies that are doing these kind of Zoom or Google Hangouts, or we also have GoToMeeting that they're speaking with clients that are otherwise face-to-face clients, which we've been seeing less face-to-face clients recently, or in recent years, but we've been able to manage the process because of our digital application and making it as seamless as possible. The only hang up we had to address was the closing process, which wasn't digital because of state laws and regulations. But our all the title partners that we've had and that we've seen have been amazing with their guidance and workaround. Some of the successes is on some of these closings is right, the attorneys have implemented a policy to say, hey, only like required people, only the buyer and the attorney and the notary, gloves, masks, on some of these refinances, which I want to make sure that people understand too from real estate, that our ability to do refinances to help people through times or give them access to cash is also important. The notaries have been able to go to people's houses, sign outside through the window, wear gloves, masks, have them use their own pens. There's been a lot of like cool things that the whole industry has, or at least I should say the people that we've worked with have come together to make those things happen. And like I said, in addition to that, if they have issues, we've been able to provide them, extensions on, for free, so that they're not being penalized, on some of that. And because we want to be here to support this market. And so if we have to do what we need to do to eat it, then we do, for the good of everybody.
So
Yeah.
I heard you say two things, that the Feds was the job verification and appraisal, that they're lifting restrictions on that, which should, like, how does that affect you, where you're calling? It kind of explain that a little bit.
Yeah. So
what it was and what it is now.
Yeah. So typically on home purchases, we would get, for most of them, we would get full appraisals, and that means an inside and out appraisal. What the easing of those guidelines has done for us is to say, hey, if a full appraisal is not available, given this situation of the social distancing, then we, as Fannie Mae or Freddie Mac, will accept the following two different types of appraisals, which we have available to us, which are a desk appraisal, which is an appraiser does everything electronically and remote to the best of his ability, or her, or a drive-by appraisal. This requires, this can be where he can measure, the property, take pictures of it, but not necessarily have to go inside, which is perfect for this situation. So as we see those coming, we'll be able to switch those around and make sure that everybody can still get the job done, because those are the two things, the closing process and the appraisal process that required a face-to-face. And then the secondary part is with verifications of employment, it can be difficult if everyone's home, their HR departments are not picking up their office line. So we've been able to work with clients to say, hey, is there an email address? Is there someone that we can, call a cell phone to try to get some of these things done and acceptable to where they work for us as lenders, and also for the clients, to make sure that we're not delayed on that side. So those are huge improvements on our end. But I do have to say that these alleviations of these guidelines and this liquidity in the market is currently only good for these type of loans. So any loans that are considered, I guess they used to be considered like exotic type loans, non-QM, these are loans where they used to be called subprime, no verification of income or different verifications, some sort of portfolio. These are also portfolio loans and lenders. I can't say that those guidelines are alleviated. And the other thing that I have to share with everybody is that given this tightness in credit and risk of not knowing exactly how this is going to shake out with employment and all that stuff, those loans are probably on hold for a while. They don't represent any negligible percentage of our business, but people should note that people that are pre-approved with loans that are otherwise not standard conforming loans, this needs to be revisited with whatever the lender is.
It could, because there's a huge risk factor right now. It's just we're dealing with the unknown. We're dealing with the time of the unknown. We're dealing with where prices will go. We don't know. I was just talking with my coach because he's in California and they've experienced what we're experiencing a few weeks before. And we don't know where the prices will go. If the interest rates continue to rise, well, sellers may have to actually come down in price anyway, or there might just be such competition when everything starts back up at full, at 100% again, that who knows what the competition will do. The supply and demand will have definitely effect on market value.
Correct. Yeah. I mean, I do just see that there might be a correction from that standpoint, but I tend to try to be positive on the other side of saying, hey,
you're
maybe
always so positive.
I can't. Well, with I can't always be positive, but I from a standpoint of like, look, like maybe this is the kick, for some of these that we've had an inventory problem for years now. Maybe this is after this settles, people, not for whatever happens, maybe they jump off the fence saying, hey, look, like I can't, take the risk of keeping this home. Maybe I should sell it now while I still can. Maybe I should move, downsize, maybe their income situation changed or the uncertainty of it. I mean, I always see this as a possibility that, hey, it might, if prices are corrected, let's say they go down because of supply, or demand or interest rates. The other side of it is like, hey, maybe it'll get more people to sell their home because of things that they've left, on the back burner. And this kind of life-changing, life-altering situation that we're in, can move them to say, you know what, like, I don't need this big house. Like, let me, if something, comes up, let me, downsize. And so there's a good and bad to every coin, but if there is a positive side to that, maybe that's it.
Yeah, I can see a bit of that happening where people are just reassessing life, saying, am I really living my best life? What should I be doing? Maybe I downsize. Maybe I move to Florida like I always wanted to. Travel the world when this, who knows? It might really change
Exactly.
the way we live. And
Yeah.
therefore, that would dictate lifestyle and then choices of housing and whatnot. So we really got to be a constant student.
Being in isolation, we have a lot of time to think about all these questions.
Yeah.
Yeah, I mean, we've been stuck in a lull.
Huh?
Yeah.
We've been stuck in a lull for a while with steadily increasing prices, economic expansion. Like, sometimes that doesn't bring people off the fence from a listing side. Whereas the demand here is I think going to be there. For the short term, this is just going to push things out. Longer term, depending on how the unemployment numbers shake out, I do see rates staying low because if there's just too much support for rates to be staying low, and with the backstop of the Fed on these types of loans. Now, remember, it's not every loan, but it's these type of loans that make up most of our business. We see that rates are good, liquidity is there because you're basically guaranteed by the federal government that these loans are good. But I do see that the market might dry up for some of those exotic loans, and I see them, going away. And I never really agreed with those loans anyway, but they were coming popular, and so that might clean up. But I think that for the types of loans that we deal with on a regular basis with KW, we're going to be fine. These are straightforward loans that people can document income. These are going to be fine for us in the future. So that's kind of my take on the on that side of it. The one thing that I could say is maybe turn times would increase if we see rates stay really low, because you're going to see some additional people looking for money or refinancing, or obviously the purchase season when it does get into a full effect. But we're ready for it and we're working through it.
Right. One other thing you said about the refinance. I mean, I don't know if I shared before, but I'm in the process of going to refinance because of the rates, and that may be something that we should all be talking to our clients about, even if we put them in a home just a few years ago, as to what equity they have there. Maybe they're pulling out some equity so that they can purchase that motivated seller that's on the market.
A lot of it, absolutely. That is absolutely, and a lot of things that we've been discussing with people that are buying or refinancing is we're having, I'm having meetings every single day with my team to make sure that we're doing the right thing by our clients, having these conversations that are real about, hey, if you're unsure about how this, might work in the future, maybe you don't have to put as much down. Let's talk about, having some more money set aside. Let's talk about, other options here so that you're on a path to success for when you're buying a home. The worst thing that could happen is if somebody, maybe puts down all of their life saving, too much money down on the property, and then later on when something goes, if something goes wrong, they're
poor.
Yeah, and so we're talking to our clients that are refinancing or buying about, look, take a maybe the longer term loan. Don't stick yourself in a 15-year loan. Don't take a little bit of extra cash out because you never know. Let's consolidate some of this debt. Let's see what to do that. And so these are real things that we're doing on a very one-on-one basis to make sure that every client, whether they're buying a home or refinancing, is on their way to success. Or if they're refinancing to buy a home, another reason, like you said, like there's reasons of getting things done in the right way so that they can purchase on the next time, or maybe they're refinancing an investment property so they can purchase. So there's a lot of things on that.
Another friend of mine is also, she's refining so she could bring it down to a 20-year note. Still reducing her payment by a couple $100s a month and bringing down 10 years off of the loan, which is saving her a lot of money. So there are still really intelligent conversations to be having out there to be referring our database over to Mr. Marenoski. Wouldn't you agree, Matt?
One of the other things that probably flew under the radar, and this is going back to what we talked about earlier with some of the changes that we're seeing today that we have to do to get by. Some of these changes are going to stick. You know, the buyer flow process and leaving this option for people to purchase properties with limited viewing and not, you know, in-person view. This is something that, you know, as an industry, I think that we were somewhat getting ready for, but I don't think that we're adopting enough because we were so hands-on. And I think that this is going to push us into that level. And I do think that, you know, companies like Getorate and companies like Keller Williams are well poised to take dominance in the market with some of these new technologies or buyer flow processes. But another thing that I noticed just the other day, and with all of the news that's happening on a regular basis, New Jersey just passed the Remote Online Closing Act. This was legislation that's been stalled by a ton of different states. And what this means is the Remote Online Closing Act is the start of how the industry can adopt e-closing technology to have an electronically signed, not only the closing docs, which is easy, but electronically signed note and electronically signed mortgage that can then be recorded, you know, with the corresponding counties in New Jersey. So
that's amazing.
lo and behold, that got passed in 2 seconds, you know, after all this.
Well, innovation comes out of necessity, right?
Exactly, exactly.
But they can own it, or they could just, you know, agree that that's how people were pushing them, and they just finally had to give in.
So while we're still like a ways away with that technology, I don't want to say that, hey, that we could do that tomorrow, because it requires, like, you know, it's just saying, hey, you guys can figure it out now, and then it's determining how we can make sure that all of the, you know, when a person is signing something, it's actually them, and that's just, you know, additional technology and third-party verification, you know, with video stuff. But if that gets hashed out, you know, with the regulators and all that stuff, you're going to start to see electronic closings, you know, where you're not going to show up at the closing. You know, it could be done remotely, and you know, you're the realtor, I'm the lender, the attorney's on the other side, and we can, you know, get this thing done, you know, that way, like the rest of our processes. So that's like some of the things to see on the horizon that I think that should make people feel good about, is that, like you said, the innovation, you know, that spurred out of this is going to be awesome.
I think for everybody, we need to start looking at how to work more efficiently so that we can do more. Because if, you know, just saying, if by unit, our income is down per unit, we still can make that up by having a better batting average and closing more units. The cream will rise. But with technology coming in, it might cut out some costs that maybe is getting passed on to the consumer, that we might have to rethink about what our profit margin is and what, you know.
Yeah, I mean, the time you would hope that the efficiency would create cost savings in both time and actual money, and time is money when you're a realtor. So some of these technologies or some of these changes might end up being, you know, for the better, because then you could just close more volume, even if the you know, the margins might come down, or the total, you know, volume might come down. So I think that was probably
all you want to cover.
Yeah, I mean, that was the main thing. It was just to make sure that people understand that that we're going to get through this. The one thing is that I lived through the 2008, 2009, and I'm sure a lot of the experienced people at KW in the office right now have done the same thing. And remember, that was a housing crisis. That was a housing and lending crisis. That was, well, I think, worse, because it was so extended and so long. If we can get this, you know, this under control with COVID-19 and get back to work, there's no reason to believe that we can, you know, press on similarly like how we had to before. You know, this is
money. We have money this time.
Yeah, there's no like, you know, there's no lending problems. Like, there's no bad loans. I mean, there's certainly going to be some, maybe, out of people that lose their job, but that couldn't get their job back. But but for most of us that are working remote and can plug back into our jobs when we do it, I think that it'll be fine, because it's not, there's no, the banks are well capitalized. They don't have bad loans outstanding. Real estate values are good and true. They're not overinflated. I don't want to downplay the risk or the challenges that we might face, like we just talked about in the previous couple minutes. But I do want to say that this seems, from a housing standpoint, a much better position, where we can actually be, instead of the bad guys or the problem, we can be part of the solution this time. Lenders, we're considered essential, when it comes to mortgages, because people have to still buy and refi, and we're coming from a place of strength, which I think is awesome, because that's what we need.
Very different from last time.
Yeah. We're
like,
the
who
good
lent
guys.
them this money? Why are they all bouncing and not paying? So it was definitely different temperature, and I'm so glad that we're in business with you, because you seem like you really you embraced the last one, you've got it figured out, and you seem so calm and ready to take on more business than ever.
Yeah, no, we are, and I would say that anyone that's even thinking about a refinance, the rates there is some movement. Let's get it going. If there's somebody's looking to buy, let's determine that timeline, and figure it out. And I'll make sure that I'm in touch with me or my team is in touch with clients to make sure that they realize their purchasing power, that we're adjusting, things, worst case scenario, to plan accordingly, and make sure that every deal gets to the closing table, in the right way. And that's why the difference between someone that can see a couple of steps ahead, and working with a loan officer that can take the time to understand not only everything on the back end, like us, like, well, what I'm responsible for at this point, but also on the front end to say, hey, this might become an issue. Let's talk about it now. Let me make sure that I'm not, pre-approving a client at the lowest possible bottom rate. Let me leave some room in there to breathe. Let me make sure he's got an extra some money in the bank. Let me talk to him about maybe putting a little bit less down when if we get there, just to leave some other aspects. And I think that that's probably the most important part, is to make sure that every agent there knows that we are here to make sure that this is the best possible situation for the client, that we're making the right moves for them, advising them accordingly, because you can't just sugarcoat it and say, yeah, everything is great. The test of true leaders and true professionals in our business is to lay out, here's the good, here's the bad, here's how we're going to help solve this. And that's I think the difference between anything. It's not just saying, oh yeah, no, everything's fine. It's going to be, hey, these are the things that we're going to account for, and make sure that we got your back in case something happens, or this is what's going on. And that's why the other thing is that if for some reason something happens with a client, we're not collecting fees upfront. A client loses their job or something like that. I mean, obviously that would be terrible, but we're here to help and make sure that they're making the right decision for themselves and their family. But there is some bright side on the other side of this.
Definitely. All right. Well, next week I want to actually have some people come on and ask you questions while we're on our time.
I would love that.
Yeah. So we'll do it every Wednesday at 1:00. And I think you gave us a lot of confidence knowing that you're a great team member. As our last discussion, Matt and I had, talking about our single agents, when they look at who their team is, they really do have to depend on their partnerships in their professional partnerships. And so thank you for being there. Matt, anything else to finish?
No, I think, Nick, that was very informative. I think, I like, you're telling just how it is, the positive, the negative, just where we are. And the thing that really stuck out to me is that this period of time, it's pushing us into changes that maybe would have happened a year from now, but are happening now, as opposed to maybe 8-9 months from now. And I think that's good because I think as a company and we're aligned with really good partners, I think
Hmm.
Keller Williams as a company is prepared for this shift. I think we're prepared for this change and moving towards the technology, the more virtual platform, as well as being aligned with vendors that are able to support that. So I think just from listening to you, I think what's exciting is, some of these things that might have changed in a year from now or 2 years from now are actually speeding up a bit just because of the necessity.
Yeah, yeah.
Yeah.
It's
Okay.
gonna help us out in the end. We always come out stronger.
We will.
And I look
All
forward
right.
to the next week and the
Yeah.
questions. It's always important to me from understanding everything on my end on the market side, but also to understand what's going on the street with agents, what challenges and what questions they face, and I'm ready for that, and I'm also ready for the phone calls too if anybody needs anything from my end.
Awesome. Well,
All
thanks
right.
for being on, and we will talk to you next Wednesday.
Thanks, guys.
Thanks, Mac.
Good to be
Bye.
with you. Be well.
You too.
Bye.